Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Kevin Davitt, head of index options content at Nasdaq, for an update on what's happening in the Nasdaq 100 index. And Kevin, it's great to see you as always, and great timing to be on, because since we spoke since July, with earnings season, the Nasdaq 100 certainly has had a reversal of fortune.
It certainly has, Jill. Thank you. It's great to be back. And as you kind of alluded to, there are some really exciting things to call attention to since the last time we spoke. So from a business perspective, one week ago, we listed Tuesday and Thursday PM settled NDX options. So when you combine that with the previously listed Monday and Wednesday index options, it means that market participants now have daily options available out through late September. From a more practical perspective, it means that option users can express their sentiment on a more granular level. So there's almost unlimited spreading opportunities now. For example, you could hedge against very specific event risks now with these daily options. So most Fed meetings conclude on a Wednesday, or maybe a key NDX component, like you mentioned, has earnings on a Tuesday or Thursday. You could use an NDX option that expires on the close of that session. So whether your time frame is very short dated, or you prefer to look at options that expire well out in time, there are NDX options to meet those needs.
And let's talk about market movement over the past few weeks. Whether earnings was a catalyst or not, definitely a turnaround in the index here.
There sure has been. So you mentioned that we pretty much moved through the bulk of earnings season, and then the other sort of big catalyst was a Fed meeting, which I'll reference. So this has kind of become one of the most disliked market rallies ever, at least in my sort of context. I asked myself, like, are we still in a bear market, or is this a new bull? So the Nasdaq 100 has gained more than 20% over the past 2 months, so a little bit longer time frame. That's technically a bull market. Interestingly, the market bottomed right after the Fed announced a 75 basis point hike in mid-June, so again, 2 months ago. In terms of leadership, the Nasdaq 100 has outpaced the S&P 500 over that 2-month time frame. So looking at closing data as of yesterday, the NDX was higher by nearly 21%. By comparison, the SPX was up about 17% over that 2-month time frame. Now, historically, July and August do tend to be friendly months for investors, and September and October have a bumpier history. But forward volatility measures have declined significantly in recent weeks, which arguably signals less concern about that future path than index options were pricing just a few weeks prior.
And Kevin, let's talk about more detail there. You brought up forward volatility. What's going on in the Nasdaq 100 volatility index, what we call vol-Q? And you know vol-Q term structure specifically. Explain to us what term structure is and how options traders use it as an indicator as they're looking to examine their entry and exit points.
So that's a really good question and a really key point, particularly as it pertains to futures markets. And so this vol-Q and the NDX ecosystem continues to grow. For those that might be unfamiliar, we have the vol-Q index. It's a dynamic measure of at the money 30-day forward volatility that's based on NDX option prices. Now, there are also vol-Q futures. Those are available at CME. And what we're excited about is that we recently listed the month 2 and month 3 contracts for the futures as well as the options. So that's building out the term structure that you mentioned. We are establishing this forward vol term structure for the NASDAQ 100. Now, today we had an August futures and options expiration. They cash settled at 23.87. We now have September, October, and November futures and option contracts available to trade. Practically speaking, which is the world we live in, that opens up a variety of spreading opportunities, and spreading in the vol markets and futures markets generally is hugely important. So if you think about the relationship between expected volatility in different months, that can and will move. It can expand and narrow. And that creates opportunities to express an outlook on, just by way of example, how the September vol-Q futures might move relative to October or November. Similar expressions can be made using options, but in that situation, you introduce the other Greeks. And you could use futures or options to offset vega risk over very specific time windows as we grow out this term structure. So it's a really exciting time at NASDAQ. Our team will continue to work to educate those interested in these products on the risks as well as the opportunities. So thank you for pointing it out.
All right, Kevin, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.